Good morning, everyone. We are getting ready to go live. I'm waiting on YouTube to be able to connect. There we go. Good morning, everyone. I hope everybody's doing very well on this Friday morning. And here we go. Let's go ahead. And we are live. This is Travis Witherspoon from Carter Cow Capital. Carter Cow Trading on Instagram, Carter Cow Trading on Facebook, Trade with Travis on YouTube. I hope everybody's doing very well on this Friday morning. Um, Hopefully we get a little bit more answers when it comes down to everything else that's going with the overall voting and everything else. It seems like we're getting very close to see who's going to end up being our next president. It seems like Joe Biden is going to end up probably being our next president. And we'll see how that affects the market and see how we end up going from there. But for right now, we're seeing a lot of predictable moves, and there's a lot of money out there that we need to go ahead and see if we can be able to capture. So let's go ahead and get into it. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well. I can see everybody and see all of my family on Instagram. Hope everybody's doing very well. If you want to see what we're doing live, all you have to do is go to Trade with Travis on YouTube and be able to see what we're doing. All the people that are on YouTube, hey, how you doing? I hope everybody's doing very well. I can see that you're on now. See everybody on Facebook. See that you're on now. See that you're doing very well. So hopping on to the screens, getting ready to go and complete all of this stuff. It's been a very good week. It's been a very different week, but it's been a very good week in general. And I hope everybody has had that same type of feeling when it comes down to everything else. If you're new to this, what we end up doing here each and every morning is that we spend about 30 minutes taking a look at some overall trading pairs, see if we can be able to find some trading opportunities, and we trade these live. So that means that if I find a trading opportunity, I'm going to give that trading opportunity to you. It's up to you if you want to be able to make that decision to spend your money on that overall trading pair. But we do very well when it comes down to being able to pick out winners, and when it comes down to eliminating losers, when it comes down to being able to trade. And also, if you're interested in being able to learn Forex a little bit more, what you can be able to do is go to cartercowcapital.com/start here, or you can hop inside our next Forex bootcamp that we're going to end up having November 23rd to November 27th. It's the last month of or last week of November. Obviously, we know that Thanksgiving is going to end up doing that, but it's going to be from 9 p.m. to 10 p.m. Once again, if you're interested in being able to learn how to Forex trade, or you just want to dip your toe in the water and kind of figure out what is Forex trading. How can you be able to use this to be able to create passive income? This is something different. You don't know anything about it. That's fine. I got you. We're going to end up spending 5 days we're going to end up spending from Monday to Friday, being able to spend about an hour each session, helping you out, being able to learn anything and everything that you need to know when it comes down to Forex trading to be able to get you started. And then after that, get you to a point to where you can be able to answer the question, do I want to be a Forex trader or do I not want to be a Forex trader? Guess what? Both answers are okay. But at the end of the day, if you don't know someone, or you haven't found a mentor, or you haven't found somebody that brought it up to you the right way, then you will never end up making the best decision that I believe that you could possibly be able to make, and the best bang for your buck decision that I think that possibly you can be able to make. So once again, November 23rd and November 27th. If you want to be able to hop in, all you have to be able to do is go down to that link. This is if you want to hop in and be able to purchase. I'm placing a purchase link down in the chat box and be able to go from there. Obviously, you want to be able to get more information. Obviously, you can go and email me or send me a message in any one of these comments and be able to go from there. But have sent them to Facebook and YouTube. So anybody that's looking at this later on, there you go. We're good to go. You're going to end up receiving a lot of good stuff for this one. I think this month is probably going to be the best month as of yet when it comes down to everything that we're doing. All right, so let's go ahead and hop into it. Let's talk. So where are we at when it comes down to the overall markets? What are we looking for right now? What's the biggest deal that's about to happen? Well, yesterday, what ended up happening was that the pounds ended up having votes. Governor Bailey ended up speaking, and pretty much most of the information was somewhat negative, but the market didn't move down as much. Once again, the U.S. is basically in flux because we don't know who's going to end up being the president. We're kind of leaning to a guy, but it's not been announced. So We looked at how everything was kind of pushing together. We're kind of moving into the non-farm payroll type of days, and we just don't know. Now, remember, non-farm payroll typically don't trade when it comes down to the U.S. dollar. So typically, this is one of those days where I was like, okay, well, we want to see how the market's going to move, but overall, we ultimately don't know, right? We see that in consolidation, the U.S. dollar has been weak. Is the jobs report going to end up making the job strong? This is a very low number to be able to go above. 600,000 is a very low number to be able to go above. I think that it can hit 700, 800 very easily, and the market could basically pop up to the ups. Pop up for the U.S. dollar. So we have to keep that in mind. If we are in open trades while that's actually happening, we need to go ahead and be aware of that and go ahead and get out. I am in a couple open pairs from the trades that we took yesterday, and I want to talk about those in general. And I'm going to tell you what my overall thought process is when it comes down to trading them. And then after that, once again, like always, you can make your own informed decision about what you want to do with your money. But going into today, non-farm Friday. Remember, non-farm Friday is based off the jobs report, seeing if there is anything that's happening with the jobs report. This can be a double whammy because it can end up being very good for the U.S. dollar with having a very good jobs report, and then after that, having the president be announced. And if that suffices the market to make the U.S. dollar turn around, then we have to pay attention to that. Unemployment rate and average participation rate in wages, and Governor Macklem speaking for Canada is going to end up happening next. Remember, the Canadian dollar typically slows very down before that overall news, and then after that pops to the upside very quickly. So we have to take a look at that when it comes down to the news. Okay, so let's go ahead and hop into it. We got a couple open positions right now. Half of these got sent to our boot camp, and we want to take a look at those. We are currently up on the Euro United States dollar. We are also currently up on the yens, being able to see what's happening with that. Both of these pairs basically have a break even between all of the trading pairs. So quite frankly, we won't lose any money if the market doesn't hit our positions. Quite frankly, we'd just be in profit. We've locked into positions, so we will make money. The question is, are we going to get up to that 1.19 number that we've been looking for to be able to go through? And that's on the Euro United States dollar. We'll hop into that one, but that was the first one that showed up on my chart. So I wanted to make sure I end up saying something about that one first. All right, so let's go ahead and get into it. On the U.S. dollar, from looking at the U.S. dollar standpoint, we got it from a daily, weekly, and weekly standpoint. We can see that this market has continued to fall. With this market continuing to fall, this was the overall low. We're currently working within this overall low with the weekly down position at 11,565. Currently, the market right now is having a sentiment of the market basically being bearish. Also, what we can be able to see is we have a breakout. Now, typically what happens in a breakout is that you end up having a retest. Will the non-farm payroll information make the market turn into a retest area and start to push back up bullish? And then after that, try to push back up to this 1200 area for its overall support. That's something that we have to keep in mind. Currently, right now, what we're looking at is a spinning top for the overall candlestick. Typically, if that remains to be the same, then that means that we're going to end up seeing consolidation coming after that, because that's an indecisive move. We had all decision. This would be an indecisive move, and maybe the next candlestick might end up being a decision candlestick towards the opposite side, pushing towards the bull's favor. But right now, the market is considered to be bearish, and we're going to end up looking at that as a bearish trigger to be able to say that we should be looking to sell on U.S. dollar pairs. Now let's take a look at what's happening with oil. Okay. That's what I get for not paying attention to oil and not giving its just due. So let's go to the daily. And we need to go to the daily first so I can be able to kind of explain what ended up happening. Remember, we've been talking about oil and how oil is expected to be able to fall. And if we end up getting a counter trend line break up to the halfway point, then we wanted to be able to sell. Well, guess what happened? The market ended up pushing all the way almost up to the halfway point. Then after that, started to sell from there. It got back up to the 39 area. And then after that, subsequently has been falling since then. So what are we looking for at this particular point when it comes down to this overall move? We need to get back into the 2 hour and see if we can be able to find a counter trend line break. Well, we do have a counter trend line break. The market is in the buy zone right now. Can we look to be able to get in on this trading pair as we speak? The answer would be no right now. The reason why it's no is because that if we try to catch it, we're going to end up selling prices in the sell zone. we're going to sell prices in the buy zone, meaning that we're not going to get as much value as we think that we're going to end up getting. Now, we've had a couple opportunities. We had an opportunity about 4 hours ago to be able to catch it right here. Obviously, we had the opportunity right there. I don't know if I didn't set my alarm or whatever may have been the case, but that would have been a very good trade at 39.20. Obviously, right here, we would have been paying attention to at least 109 pips, or right here at 132 pips. So keep that in mind. 132 pips at $1 a pip is $132. So you did it based off of a standard lot. That's basically $1,320. So missed out on the opportunity right there when it came down to that move. And that opportunity came yesterday. Okay, so what's the next thing? What are we looking for from here? We want a little bit of a upside push, just a slight little bit of an upside push to be able to get in. And then after that, look to be able to sell back down if we're looking at it from a 2-hour perspective. If you're too anxious and you're saying that you want to get in now and you do not want to waste your time on being able to wait, what I would do is I'll wait for the 15-minute time limit. Look at a trend line break on the 15-minute. If you can be able to get that, that means that at least you can be able to get the price to be able to go back up for you just slightly more. Once that happens, then after that, I will look to be able to sell it down from there. I think that once again, if the market does look to fall, it's going to end up falling down to 31. That's about 600 points from this position. That's plenty enough area to be able to get. Obviously, we wish we could have got it at the highest point. Right now would have been solely to profit. But once again, sometimes you only look at a certain amount of pairs and you don't get your eyes out on everything. So sometimes you miss out on things. Let's go. Upstairs. Get your car. Get your car right ahead. So next one, let's look at the one that's been kicking tail over the course of the last few days, and that's been gold. Remember, keep this in mind. People trade gold. People trade gold based off of two reasons. They trade gold based off of fear and based off of being able to say, okay, what's going to end up being. They trade it based off of fear, and they're trading off of, okay, what's going to end up being the best situation long term for protecting my value, because gold typically holds its value over time. So we're doing it based off of the U.S. dollar. We don't know what's happening with the U.S. dollar. We don't know what's happening with the overall presidency. We can see that the U.S. dollar has been losing value. Since then, that's all that's been happening. Since November of 2019, the market has just been pushing up. And it went almost parabolic early in July when it came down to this move. The market has since then recovered and rejected, has broken this trend line to the upside. We talked about that early on Monday. We said that we were buyers on gold. We said that that's something that we want to be able to do. We have to be able to find low prices in the buy zone. On Monday, what we end up getting was the market basically being in a buy zone. We had a retest of this overall area, and then boom, big explosion to the upside. Now, we end up taking our profit in 1934. The reason why we took our profit based off of 1934 was based off of what was the projection of the move. Now, we have to keep in mind, what's the next area where the market could initially go? 1965. So you did not take your money out of the market when it comes down to the overall pair. Keep on riding it up to 1965. If you did take your money out of the market, then obviously the market's at an R3 level. Could you look to be able to scout the market from here? What I would look for is a 2-hour and see what's happening with the 2-hour. Do you have a counter trend line break? Yes, you do. You have a counter trend line break to the upside. Now, the counter trend line break has already happened about 4 or 5 hours ago. So you kind of missed out on that small little break. The question is, could you get something out of it? Right now, it's from 1953 to 1965. We have a little bit of a movement from this upside. Look at the 15-minute chart. Go upstairs. Go upstairs, baby. Go ahead, mouse. What we see on the 15-minute chart is the market's starting to fall down slightly. What I would do is same deal, just like with oil. I'll wait off the 15-minute chart. I would see how this market is going to end up reacting for its overall movement. And if it breaks this counter trend line to the overall upside and it gives you opportunity to be able to get in, then take that. I would take that. The stop loss that I will end up placing will be below the swing low of wherever this market actually ends up falling to. I think this swing low overall is probably going to end up being right around the 1920 35 area. You could be able to place your stop, kind of basically what we ended up placing our stop at before on this last trade that we ended up winning off of yesterday. You can as well. Speaking of that, obviously it was a green day yesterday with the market basically pushing up to 1935. Exactly what we expected. Remember what we were looking for based off of the 2-hour time frame. We wanted to be, based off of the 15-minute time frame. We were looking at and trying to see, was gold going to be able to hold above this overall resistance area right here when the market was moving. What was it? 15 minutes. Let's go back to the 2-hour. No, I'll say 15 minutes. It was 15 minutes yesterday. We wanted to see if the market was going to end up holding this overall area. Oh, there it is. I'm sorry. Right there. Hold on. What number was that? 1916. No, it was right here. Sorry about that, guys. All right. We end up seeing that the market held above it, went above 1920, stayed above 1920. Then after that, it exploded back up and has not looked back since. So once again, that's why that's how you end up using consolidation breakouts and retests in your overall favor, and they end up working out very well. So I'm happy about that. More importantly, I'm happy for everyone that ended up taking that trade to be able to do that. Everyone, give me 1 second. My son is a little restless this morning, so I want to see what's actually going on with him. While I'm setting that up, let's go ahead and look at the take a look at the NAS 100 and see what's going on with that overall pair. NAS 100 has been exploding to the upside, and we want to see if we can be able to get some buy trades on this one before the market ends up hitting its overall D extension. Okay, sorry about that. So what happened? Gold ended up hitting this. Not gold. Overall, market was considered to be bearish. We hit the 2-hour D extension from this move. All last week, broke down into the sell zone, went down to the buy zone. Once it went into the buy zone, broke the counter trend line break, in which we talked about at 11,300, pushed to the upside. The market has pushed to the upside from there. People are getting back into technology. Because remember, the NAS 100 is really kind of technology based when it comes down to most of the pairs that you're basically looking at. From here, what has happened from there? We look at the 2-hour. 2-hour ended up breaking the counter trend line break. It gave us the opportunity to be able to get in, broke the counter trend line break to the upside, and then after that, subsequently broke again to the upside. Now, since the market has hit a D extension, what are we looking for overall? Now we're looking at a new fib to the upside. Based off of this new fib to the upside, we can see where the market is potentially going to end up going overall. So we're going to go from this point to this point. Is our fractal high. We can get rid of this previous candlestick here, but that one is over with. Now here goes a new move. Currently, right now, we can see that the market is actually falling. Even though that the market is at the 23.6, I would love for the market to be able to fall down even lower. If it gets into the sweet spot area, then it turns into a very good value trade. Remember, if I'm looking at this from a swing trading perspective, I want to get as much value as I possibly can. If I'm looking at this from a scalping perspective, I see that the market is in a 2-hour. So we have to be able to keep that in mind and see how the market is going to end up reacting. Now, that means that the market could pop up and be able to take it all the way up to 12,633 without necessarily being able to move. Or it could go up and break the 23.6 and then start to move to the upside as well. If it does that, then it's going to find resistance at 12,454. The reason why I will find resistance at 12,454 is because of the 80-20 rule. If you understand the 80-20 rule, it's because you've been in one of my boot camp classes, or you are in the master class in general. We talk about that a lot, so please make sure that you understand that. I know that the market is in the buy zone, but I do see that momentum is actually going down when it comes down to it. Remember, momentum is typically toward the backside and toward the opposite side of the overall trend, so we have to keep that in mind when it comes down to trading this overall pair. All right, now, with that being said, let's go ahead and get into some U.S. based pairs. I want to take a look at the Euro United States dollar. Kind of looking at this one, kind of worried. Not necessarily worried as much, but obviously we'll love to be able to see the market push up to 1.19. Currently, the market got as high as 1.1883, which was about 17 pips away. Currently, the market has hit 1167. So let's break this down. Let's talk about why I'm so adamant that I think that the market is going to go to that price, and quite frankly, why I think that's going to end up happening. But we also know the job support is going to end up coming out a little bit later on, so we have to keep that in mind. Let's take a look at it. Market has been retracing, pushed up, fell inside of this zone, double bottomed right here at 1.16. 1.16 was the smaller portion of the smaller portion and the resistance of consolidation within this overall area. We're looking at being able to buy to the overall top. Once we got into this trade yesterday, what we end up saying was the market ended up pushing up towards this area. The market ended up pushing up towards this area and basically held that overall position to the upside. So the overall goal was that when we bought down here, that we wanted to buy up to 1.19, which is basically the resistance. We've seen that the market has had a little bit of struggles of being able to break out of certain areas right here, kind of like what we at right now. But overall, it has been able to break past that position. From breaking past that position, it has went up to 1.19. So the expectation is that after it ends up getting past this small little consolidation, if this consolidation holds, then it can be able to go up to 1.19 in general and be able to hit this overall position before ultimately falling down, or ultimately this completing this overall position at 1.23, which is the D extension up here, 1.2365. So what's the play here? What's the overall move? Well, if you're not in, there's really no play at all, because the market is in the middle of consolidation, and we can see that the market is in the no trade zone. The stochastic really doesn't mean that much when we're in consolidation, but we just have to keep that in mind. When we're looking at this from a 2-hour perspective, for the people that end up getting into it yesterday, if you end up taking profit when the market end up basically giving you a slight retracement, then I thought that was a very good move to be able to do, which meant that you basically end up double dipping when it comes down to this pair. If you're still in this pair based off of what we ended up doing a couple of days ago, then that means that you're up. Let's see, you should be up based off of this area right here. You should be up right around 193 pips. Once again, congratulations. Let's see if we can be able to ride this thing all the way out. But we do know that non-farm payroll is about to happen, so you need to make sure that you start protecting your overall profits. And I think the best area to protect your profits at right now is to move your stop loss to 1.1850. If you move your stop loss to 1.1850, then that means that one, you protected at least 170 pips when it comes down to that move. So you're guaranteed at least $170 or $1,700 for his overall movement. Now, once again, I can't tell you what to do with your overall money, but I'll tell you what I would do with mine when it comes down to this. What I end up doing personally was I end up getting out once this market end up hitting the top of this overall move, and this was at 1.1859. Subsequently, since then, when the market ended up breaking a counter trend line and giving me a chance to the upside earlier this morning, we actually ended up taking that trade again from right here. I actually got in on the first trade right here. It got in on the second trade at below 1.1840, and subsequently the market ended up pushing up, which was expected. Remember, I believe that the market will complete the consolidation move. Do I expect that the market is going to end up breaking out and retracing and start making that move to the upside from there? I don't know. Right? But I do know that the market will probably end up doing this and at least hovering around here before trying to make that move. So that's where we are when it comes down to that trade. I'm very much confident in being able to say that that's the move that we need to pay attention to, or at least being able to finish up. If you're not in this trade, could you get in for scalping? what I would look for, just like what I talked about before with the other ones. Wait for a counter trend line break, 15 minutes, you get in the buy zone, then take the trade. Stop loss will have to be very tight for us, that one. But once again, if this doesn't make its move or doesn't complete before 8:30, before 8:30, I will be out of this pair before 8:30. Remember, non-farm payroll is going to end up coming up. The market moves very violently to the upside and to the downside when that happens. We don't know what's going to end up happening. That's a very low jobs number with 600,000. I believe that the market is going to end up pushing that number up, which means that it's not guaranteed. It's not guaranteed that the market will complete this overall D extension, but it is guaranteed for me right now that I have that I basically have $300 in the bank, right? I would make $500 if it goes to the upside, but the question is, if the market goes away from me, then I lose $300. So that goes back to the original question: what is more important, being able to go out to 200 and trying to get what you can, or being able to pocket what you can and allow them, and then after that, moving on and find another pair? We made $200 yesterday. We made $300 today. We made $500. Well, overall, that's $500. That's $500 that I didn't have yesterday, right? Overall, so we got to keep that in mind when it comes down to looking at this. Got a few. I can go and take a look at possibly one more pair. We want to look at the U.S. Canadian, and I want to take a look at the U.S. yen as well. U.S. yen, what has happened? We talked about the market breaking past 1.14. If it stayed below 1.14, we said that it was going to run down to 1.1. Well, yesterday we ended up getting that move. I wish I could have caught. I wish I could have caught it early. Wasn't really paying attention to it because of doing other things, but market end up breaking down. For the people that have been trading this since 1.16 and got in and stayed in, congratulations. This one was a very simple trade to be able to run. That's 261 pips from the first time that we end up talking about it. The last time you end up getting into it before then, that should be about another 213 pips. Right now, I end up taking an entry on this one because the market right now has not completed the 1.01 move to the downside on this one as of yet. Remember, I said anything below 104, the market was going to run, and I still believe that. I think that will remain to be true. And right now we see that the market had this huge move to the downside, which about 100 pips. It was 110 to the downside. I do expect that we'll probably see a little bit of stagnation, but the sellers have started to sell it right here. So with that being said, it gave me no choice. I have to be able to get in right here. And overall, it's a small limit, but it's still money at the end of the day. We didn't make all of it. We made a good portion of it up here, right? We missed out on this move up here. Or at least I missed out on this move. Everybody else or everyone else, they end up taking that trade and you stayed in it. Congratulations. Obviously, that's what we do here. We try to make sure that everybody can be able to capture pips while we're doing that. So that's where we are when it comes down to that. U.S. Canadian dollar. What we're looking at, market is basically market is broken the A on the upside, so that means that the market is expected to fall. Quite frankly, I think we've already had a crown to already happen on this pair as well. And we're just looking at the 2 hour. We're just looking at that particular position. We see this right here, A to B. There goes your top move. There goes your crown right there. There goes your actual low. And the market bent up here, and currently the market is falling. This is the position right here. Market was expected to complete its overall D extension at 1.13. Market's already completed that overall move, quite frankly, and we missed out on all of it. So that's what happens sometimes when you're looking at other pairs, or sometimes when you're being very cautious, you miss out on potential moves. This one has already completed and over with, and there's no other move on that, at least from a 2 hour perspective. So we're done with that. But currently, right now, we look at it, we are up. Currently, right now, we look at it, we are up 269, was up 300 the last time I ended up talking about it. So once again, take a look at what's happening with the Euro United States dollar. We want to see how this market is going to end up reacting. We know that it's in the sell zone off of this overall move. The question is, can it maintain and stabilize instead of just falling off a cliff? As long as it doesn't fall off a cliff on this one, then we should be good with being able to make sure that we have profit. This is based off of a 15-minute chart. The 2 hour is basically in the buy zone, so we expect that the market is going to continue moving to the upside. But once again, we've already done protected ourselves. We said that, quite frankly, if you end up getting in with us a little bit earlier, that was in our masterclass, we put our stop loss at 1.1850. If the market falls down any lower, one, you can take profit right now and basically bank in this case, 255. Or in my case, $246. It keeps on falling down. I might end up taking profit. I don't know. Let's see. Yeah, I might end up taking profit. But overall, if this market holds and stabilizes, then we should see the market push up to 1.19. That's about 30 pips away. That 30 pips is really kind of catching my eye overall, especially if this 15-minute low price can be able to hold, and then after that push back to the upside. Once again, we don't know what's going to happen. But overall, I can somewhat expect that if the market stays above this overall area, and then after that pushes back up, then we should see that this market is going to go to 1.19. We talked about that small little consolidated area based off of the 2 hour before, which is right around, what was I looking at? Yeah, we're looking at basically right around this area. So if it turns this area into like a past support, and let's say if it hits 160 and then after that pops back to the upside because it turned that into a past support, then we should be good and we should be safe. But overall, sometimes you got to play it. We have 210. The market is going to end up falling. Hopefully it doesn't fall all the way down to 50. If it falls down to 50, then we take ourselves out of the market. We basically end up losing that value. You want to go ahead and take profit, more than likely you can, but you have to keep that in mind when it comes down to the overall movement. That's the play that you end up taking. That's the reason why we trade in the first place. We trade because we're okay with being able to take risks. I know that I'm going to end up making money. I want to be able to make 5 if I can. But remember, I'm going to be out before an hour from now. Okay, so I got to keep that in mind. If you like what we end up doing, and you want to learn a little bit more about Forex trading, once again, all you have to do is go to cartercowcapital.com/start here, hop inside of one of our boot camps, or basically reserve your seat for our free webinars that we end up having throughout the week. Remember, November 23rd to November 27th, we're going to end up having our Forex trading boot camp. This is our boot camp for the end of the month. It's going to end up being from 9 to 10 p.m. each and every day for an hour. Basically, you're going to end up learning throughout that overall time how to be able to spot out trading opportunities like what we're doing, how to be able to make passive income like what we're doing, and how to be able to thrive in the Forex market. And once again, being able to learn this information and being able to keep this and have this in your toolbox will allow you to be able to do any type of trading in general. So if you like what we end up doing, once again, make sure that you end up liking that, as well as liking what we end up doing on Instagram, as well as what we end up doing with Trade with Travis on YouTube and on Facebook as well. Like always, plan your trade your plan. I see each and every one of y'all tomorrow or on Monday for different trading opportunities. Take it easy.